Okay, ladies and gentlemen, welcome back. We are now at the second half of the preparation of the financial statement. We have already done the income statement and we have calculated the net profit. And we said when we started that lesson was that the intention of the business is to determine its profitability, to what extent its operation is making a profit or a loss. All right, now we're going to be showing the financial, another element of the financial statement. We're going to do the balance sheet, also sometimes referred to as the statement of affairs. Now, what is the balance sheet? The balance sheet is prepared. It's a list of the assets and the liabilities. Yes, the list of the assets and the liabilities in the company. Yes, that's what the balance sheet is prepared from, a list of the assets and the liabilities in the company. Now, the purpose of preparing the balance sheet is to determine the financial position of the business. How financially sound is the business? So that's why we do the balance sheet, and is required to look at how well the business is in terms of financial status. All right, so let's commence. Using the example, we would have used all that was ticked here to do the income statement, and so we're going to move now to do the balance sheet. Normally, to start the balance sheet, we start from our fixed asset. Some time ago, I would have indicated that fixed asset is also called non-current asset. Yes? Okay. So what are our fixed assets in this question? Here we have one motor van and the other equipment. So we can now we have identified them. We're going to record. So we have motor van, and the motor van is 100, and then we're going to have equipment, and the equipment figure is 662.50. All right. At this time, then we can add these two figures. Yes. We don't seem to have any more fixed asset, so we're going to add them, and the total would have been 053, yes, and 10. Right? 053 and 10. 053 and 10. All right. Our next action is that we would move now to look at our current assets. Okay. Next item is our current assets. Just to point out that depending on the kind of business, yes, the balance sheet is either recorded using a concept of permanence or concept of liquidity, right? Most time banks and so on, they record their balance sheet according to liquidity. So the liquid assets come first. All right. But that's not the case here. We're doing in terms of permanence or fixity. So we're starting with stock. Stock of goods. Another name for inventory. Same thing we call inventory. Now, the stock that we use here is not the opening stock, which is stock at January. Is that now? Stock at January. Yes, this one. It is not this one, but rather the closing stock, which is this one. So it is 27,475. Following that is our trade debtors. Another name for trade debtors would be accounts receivable. All right, so that is 12,300. All right. We have some cash at the bank. 31. So cash at bank, and that is 31.50. All right, what else do we have in relation to expenses? So we would have used this one already. We would have used this. We would have used the closing stock up here. Okay, so we have the cash in hand. And the cash in hand figure is 295. All right, those are the totals that we have here. In order, we're going to be adding all of this to get the total as current assets. Okay, so in adding the total of the current assets from this question, we would get 43,185. Yes, that's the total current assets. Our next move is now that we're going to subtract, we're going to less the current liabilities. Right, we less the current liabilities. And in this question, we didn't take this one, yeah. In this question, we would have seen creditors. So we're going to record that, which is trade creditors, and that figure would be 93.70. As well, we have a loan here. Now there are two ways to treat with the loan. If it's a long-term liability, then we would have categorized it as a long-term liability. However, this is seems to be a current liability, so we're going to write it here. Loan from Johnson, and that is 5,000. We're going to add these two figures and then subtract it from the total current asset as we have indicated we are going to less. All right, so let's do that. That would be 0 here. That would be 7, 3. Right, we're going to add this. It's going to be 100. It's be 40, yes. Okay, so it's be 14,370. All right, 70, and we're going to be now subtracting this figure from this. This is when we take that, we're going to get 5. 5 is here. It's going to be 1. Where am I? Yes. We take this from this is going to be 1. We take 11, it's going to be 7. Huh? No, 8. 8. Yes. 8 we take, this is going to be 11, so that's going to be 12. 4 from 12 is going to give us 8 again. And that would have been 3. 3 from that will be 2. Alright. So it should be here, 28815. Let's remove it from here. And there's a reason why we're taking it from this column, this second column here, to put it here, because we are going to be now adding it to the total fixed assets. All right, so this figure that we have subtracted from the total current liability from the total current asset will give us a figure we refer to as our working capital. All right, so this figure is our working capital. All right, so I always like to put a dash there so that we know we're not doing anything right here. Okay, so now that we have found the working capital, yes, we're going to add the working capital with the total fixed assets. All right, so let's do that now. When we add, we're getting 5 here. We're going to get 5 plus 1, that's going to be 6. And that's 3 and 8, that is 11. 8 and 1, 9. And 3. Good. So we're seeing we're getting 31,165. We can double line this now. Okay, that's the total of the assets. We're going to go to this second segment of this balance sheet called the finance by. That means, where did we get the finances to operate the business? The finances, assets. All right, so we start with the capital in the business. And here's the capital, 25. It is 25. Yes, 955. Okay. Our next move now, we would pull the information from the income statement, the net profit, and we'll add it. So we'll have add net profit, and the net profit from the income statement we'd have done earlier would have been 21,630. We have to add it, so we're going to add, that is going to be 5, this is going to be 8, this is going to be 15, 6, 7, and this is going to be 4. So it will be 47,000, yes, 585. Our next move is to deal with our joins. We have dealt with that already. We have used this already. All right. So the last item we have to use here is the joins. We're going to subtract it. Why? Why subtract the joins? Because the joint is reducing the amount of money that this proprietor, the owner, has in the business. The values, yes? So we're subtracting it. Remember now, joins is where the owner has withdrawn money or assets or goods from the business for their personal use. So we're deducting that value. It's 84.20. When we take that, we're going to have 5. Yes, take that, we're going to have 6. Yes, if we take this, it's going to be 1. Yes, if we carry that 17, that's going to be 9. And then we're going to have 3 left. Yes, so that's it. So we have successfully completed the balance sheet because the total asset is the same as the total liability. Yes, so we have balanced the account because we have now arrived at the same figure here and here. These are the total asset, total worth of the business. Our financing of the business is the same. So there you have it, the preparation of a simple balance sheet, putting the fixed assets, then the current assets, then we less the current liability to get our working capital, and then the section that is called the finance by, and we have calculated. So we would have been successful in preparing the business balance sheet. Their value would have been, the net worth would have been 39,165. Thank you very much. Please be kind to show your gratitude to us by clicking yes below the likes button, and also subscribe so that you can see all other lessons that we will be introducing to you. We appreciate it, and this is coming from Kings and Queens accounting class. Thank you.